Good afternoon, everyone. Hey guys, this is Bruce Marshall from Simpler Trading doing the nightly video update for Wednesday, August the 16th. So happy Wednesday, happy hump day, happy FOMC day. Today we had Fed meeting, and I'm going to do something a little different in this video. Tonight I'm going to combine the free nightly video that we do, the market update, and I'm going to combine the premium market update that we do for simpler clients as well. And the reason is that I want to walk you through some simple trade management techniques and show you a great example of one that I've done over the last week, and how I manage this trade and reduce the risk. And if you have been trading anytime at all, you know that sometimes trades don't work out right and they will go sideways and get into trouble and you start taking heat. And what you may or may not know is that there usually, there's a couple things we can do. We can just cut it loose, or we can do a little tweak here and there and maybe try to defend it and salvage it, or turn it around and turn a bad trade into a good trade. So I want to show you an example of what I did. I think it's a really good example. So for you guys in the free nightly newsletter, this video is going to be a little bit longer than you normally get, and for the premium subscribers, it's going to be a little bit shorter than normal because I'm just going to go over the trade. I will touch on the market real quick. This is the ES today. Came down. We had Fed FOMC minutes. The market initially popped and it came back down. As you can see here, for the last almost 20 days in the ES, we've just been doing this. This is the tennis ball going down the stairs kind of thing. Taking out every level. There's our fire line. Just taking out levels. Not good. Not good for the market. So if we take this out and look at a longer term view, we try to kind of figure out where we're going to go. And as you can see here, these are 34 EMAs, moving averages right here, and we have now dipped down below them. That is not a good sign for the bulls at all. All this happened very quickly in a flush down, and it was really kind of started by that Fitch downgrade of the U.S. debt. And it was time for that to happen. Anyway, we had gotten a little extended, a little frothy up here. I mean, notice this run. I mean, we had pulled way away from the moving averages, and you typically will pull back into them, bounce, pull back into them, bounce, pull back into them. And we had all been hoping that we'd pull back into here and bounce and keep going, but so far that's not happening. Now that's the ES, and if we look at the NASDAQ, same thing. We're breaking below that right now. That is not good. The rut is clearly below here. Russell 2000, not good. And then lastly, we have the Dow, which looks okay. It's been holding up pretty well throughout the year, actually. So, it's just too hard to tell which way it's going to go from here. It appears that we're going lower, but what I want you to kind of focus on is we have a Fed meeting on September the 20th. We don't have a Fed meeting in August. We got a Fed meeting on September 20th. We have CPI on September the 13th, and I believe PPI is on the 14th. So we're kind of in a lull until that happens. So we could keep coming down. I think something like this is probably more realistic, that we just kind of go in limbo until we get to the Fed and kind of see what the Fed's going to do with interest rates. So maybe we have some kind of wide chop, and maybe the chop is kind of in a downward mode, but I don't see the floor falling out and us doing one of these kind of things. I don't see that. But this is definitely not weak. I mean, not strong. It's very weak looking. So can't get any momentum. So I'll leave it at that. No real clue or clear direction here, so we'll just leave it at that. Kind of same thing we've been in for the last couple of weeks. But what I do want to focus on, I want to show you guys a trade, very simple trade, very simple defending techniques that I used on this. And I did this in the bias room. This is a trading room that we have that I manage at Simpler, and I did this trade live, and we still are in the trade actually. in that bias room. So let me show you. The trade is in NVIDIA, one of our favorite stocks. We have double, triple dipped it before in the bias room and in the main room. And basically, this is such a bullish chart, right? And you see this 34 EMA up here, right? Even back here. Come up, you pull back into the moving averages, come up, pull back, come up, pull back, and you just keep going. Here we went slightly through it, up, pull back, and it just keeps on going, you know, the gift that keeps on giving, just higher, 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 until we get right here. And the interesting thing is we have earnings coming up next week on Wednesday. So I'm looking at this last week. I'm going to zoom in a little bit here. I'm looking at this last week as we pulled into the 34 EMA right here. And I said, you know what? Every time we pull into 34, we bounce and even get close to it right here. And we bounce and we go higher and higher and higher. And we've got earnings. Surely this thing is going to bounce. Just, you know, you have to make assumptions about your trades, right? And, you know, again, with earnings, AI, all the, you know, hype or momentum around the stock, it sure looks like we would bounce there. So I did a bullish trade there. Now we entered the trade, right. So I like to buy, if I'm going to buy a dip, I try to buy between here and here on these 34 EMAs. And we bought on this day right here. That's August 9th. That's 1 week from today. I mean, 1 week ago from today. And I'm thinking, okay, this should hold. And if it comes down here, you know, it should bounce and we'll get our, you know, good entry. We're buying the dip, right? And we broke lower. And we broke lower and broke lower. So let me show you the trade and let me show you what I did. We did, again, very simple trade. We did a call debit spread. Now I went out to this Friday, 18 August, because the earnings are going to be reported next Wednesday on the 23rd. So your choices are, do you go to this Friday, the 18th, or do you go to next Friday, the 25th? Well, they report on the 23rd, so I want to be out of the trade before the 23rd, so it makes sense to go into the 18th. And another component of that's volatility, but that's a whole other conversation. So I thought we would get this pop back up, run into earnings from the little sell-off that's happened over and over and over and over. And again, I've been in and out of this stock quite a few times doing the same thing, so it just made sense. So we set it up. Notice on this trade, this is a great trade. At the time when we went into this thing, my target, I was basing on the expected move, my target was, as you can see, there's 460. There is 460 right there. So my target is right there. So all we have to do is go from there to there for this thing to, you know, to get inside our profit zone. So what is that profit zone? Check this out. I'll do it this way. This trade, if you see over here, risk $500 if we are over 460, about 462.5 actually. It's worth $2,000. So pretty good trade, makes a lot of sense. So we risk $500 over here to make $2,000 profit. And what if we just kept going, you know, up to 480 into this run into earnings? Well, there's 480, there's 490, there's 500. You can't overshoot it, right? So I was not really worried about overshooting it. Great trade setup. So how do you make a great trade setup? Sometimes, how do you make it a little bit better? I was so comfortable or confident, I guess. Of course, I'm using stops, you know, that we would not break under this. You see this prior dollar box here? I said, I don't think we're going to break under this. So I'm going to go under here. I think this is going to hold, and I'm going to go to 400, and I'm going to sell a put credit spread that's going to pay for this, or pay for most of it, right? And again, I'm going to manage the trade as I go. So I sold a simple put credit spread there at 400, all right? So now that's what my trade looks like. And this is a simple, it's a version of a risk reversal. So basically I'm using, notice I I paid 50 cents for this trade, and I sold that against it for 45 cents. Didn't quite cover it, but it covered it almost. Notice over here, if you look over here on this box, I have a loss of 185 bucks, max loss of 185 bucks with this combination trade. And then if we go higher, I'm over 2,000 bucks right here. So that's pretty cool. And again, at the time we were, I don't know, we were right here. All we had to do was just step over into the trade, and it's a great trade. And I'm safe, quote unquote safe, all the way down to 400, which, remember, I showed you that over here. I didn't think we were going to go that low, but I'm using smaller time frame Fibonacci levels to drill down on here. And I was looking at this, and I said, if we break, basically, if you break the plane here, right there, you gotta bail out of the put side, right? And that's exactly what happened. We broke the plane, and we closed. When we did, my level was actually 425. So when we broke that level, we closed the put side. Again, this is very straightforward stuff, right? So now we're back to the original trade. Again, simple call debit spread, simple put credit spread. Now we closed it. Now look at our max loss. Well, now we're down 780 bucks, but I still think it's going to bounce. So I'm down 780 bucks, and I'm like, well, you know, I'm okay. That's reasonable assumption, especially based on the profit and all that kind of stuff. I like to get my max loss between like 500 and maybe 1,000 is where I'm comfortable losing if I have to, if a trade blows up on me. So I'm down 780. That's okay. What is my profit over here? Let's see. Hover over here, 1,700. See over here, 1,720 bucks profit. So now I risk 780 to make 1,720, and I still think we have a pretty good shot of getting up there. At that time, we had about a $25 expected move, so it was very reasonable that we get up there, and I still thought this thing was going to bounce. And then we kept going lower. And now remember, NVIDIA trades on the NASDAQ. So what's the NASDAQ doing? The NASDAQ is free falling. And it's just going down, 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 down. Not helping me out because it's, you know, it's, you've heard the saying, a rising tide lifts all ships, and this is just the opposite when the tide goes out. You know, doesn't have any shorts on, or whatever that saying is. Kind of the same thing here. So we're getting dragged down by the NASDAQ. So we get down here, and now there's nothing to do. And I said, you know what? And we even talked about this in the bias room. I said, this trade beginning to look like it's not going to work. And where did we go to? I had a big level right at 400. I said, a Fibonacci level, and actually I had more levels at like 397, 395 right below that. I said, I don't think we're going to go lower than 400, right? And where did we go? You see right here, that level, see on the right over there, 403.9, and that was last Friday, actually 402.6. And I said, I do not think it's going to go below there. I think it's going to bounce. They still have earnings. The market, even though the market's weak, I think NVIDIA is going to make a comeback. And I said, and that was last Friday. And I said, you know what? I'm going to double dip this thing. I'm going to sell another put credit spread. And you might be looking at that going, well, that's kind of crazy. The first one I sold was the strikes were 400. Remember, I did not think we were going to go below 400. We came all the way down to it, and I resold this, but check this out. I moved it down to 375. So I went down 25 more points. Now I only got 29 cents credit for it, and we all did this together in the bias room. Everybody's in this trade together. We all get same prices and all that kind of stuff. So now I have my risk reversal back together, and check out my max loss. See over here, 490 bucks. So what I did was take my max loss from 780 now to about 500, roughly, right? And now I can go all the way down here. Well, what happened Monday morning? This thing bounced and ripped higher, higher, higher right there. And that day we went from 403 to 437. Giant move up here. So guess what? I was able to take off. Let me get this so you can see it. I took off that put credit spread. Now I sold it for 29 cents and I closed it for 6 cents. So check this out. Now my loss is $550. Max loss is $550. So again, I'm reducing my risk from 780. Trade's not working, going against me. I still reduce the risk to 550. And I got one more trick up my sleeve here. So we bounced here. This was again on Monday. And I said, okay, this is it. We're up 30 something points. Once we break the plane here, it opens up the door to go higher, at least here. First stop here, second stop here, most likely. And I'm looking at fib levels too. But I said, I don't think it's going to get over this 480. As a matter of fact, I've got a really heavy level there, right past 460. So what do? And you guessed it, I went to the other side and I sold, if I can get it right for you, I sold a call credit spread up here above, because now we're coming back strong, right? But I don't think we're going to just have an unlimited rally up here. So I sold a 475 call credit spread like that. Now what does that do? Well, check it out. Now I have $180 of risk max. The most I can lose on the downside is $180. And over here, if we're above 460, check it out, $2,320 profit. So now my max loss is $180 and my max profit is $2,320, right? And this is basically it's a call condor is what I kind of turned it into. I'm not worried about it overshooting this. If it gets up here, I would pull the plug on it right there. And let's see how much we would be down. Guess what? $180. So basically I got $180 up or down, and you would close, if it starts going up here and gets, and it's, like today, Wednesday, or maybe even tomorrow, and it gets up here, yeah, I'd pull the plug. And it would just kind of be a scratch. But as it is now, I don't know if this is going to make it. If it does, it'll be nice. High five. We make $2,300 with $180 of risk. Again, I just don't know if this is going to work or not. But the point of even showing you this is how you can take a very simple trade with very simple counter maneuvers. And basically, I sold a little premium down here, and then I took that one off, and then I sold a little more down here, had a win there, and I sold a little more up here. And the whole time I'm reducing my risk here, on this trade. And, and for good reason, because, I'm 50-50. I'm less than 50-50 that this is going to work now. If we have a giant run tomorrow and the whole market and the NASDAQ's up, they would have gone up today, but the NASDAQ just kept dragging it down. So again, the point is, whatever kind of trades you're doing, butterfly, calendar, simple debit spreads, credit spreads, whatever, there are always ways that you can make the trade better and reduce the risk. If I would have sold a little more contracts here, I would have no risk. And in fact, almost yesterday we talked about selling the third time, selling another one, and I could have gotten 25 cents for it at the time, which on 10 contracts is $250, and now I would have a $70 profit. So why didn't I do that? Well, because we sold off so much yesterday, it puts a lot more risk down here, and I just wasn't comfortable with it. And I've only got $180 risk. I'm not worried about $180. So again, that's just kind of a simple walkthrough of the thought process of a trade. You can take this and apply it to Amazon or Google or Home Depot or whatever you're trading, Tesla, it doesn't matter. And if I had more time on the trade, you could even get a lot more creative and bring in more premium and all that kind of stuff. This is a very kind of short fuse trade. But again, I wanted to point this out. Don't think that every time you have a trade and it gets in trouble, because they will You will have trades that get in trouble, trust me. And you know this. But every time a trade gets in trouble, there might be something you can do to turn it around, save it, dramatically reduce the risk, that kind of thing. This is a small size trade, but it's a really good example of what can be done. You can do this on any trade in any vehicle if you know how to do it. So if you want to learn how to do it, come see me in the bias room at Simpler Trading. I'm in the main room as well, our gold room. We have a lot of good traders in there, and this is basic stuff here. Again, if you're beginner or maybe even intermediate and you haven't defended trades, you might not have been exposed to this, but this is just simple. I have a plan: step 1, step 2, step 3. If it goes up, we'll do this. If it goes down, we do this. And again, once you get this stuff kind of in your system and you know how to do it, it opens up a whole new world to be able to wait out trades a little bit longer, take less risk, and have bigger gains and that type thing. And also not lose sleep at night. I never lose sleep overnight on trades because I know I can roll up my sleeves and do something if I need to. And there are a lot of other techniques we can do, but that's for another video. So I hope this helps. Hope it makes sense, gives you some ideas of things you can do. And again, come see us at Simpler Trading. I'm in the main room a couple times a week. I'm in the bias room every day, and we do this every day. And fingers crossed this thing keeps going. We have a really nice win on Friday. If it doesn't, we gave it a good shot, right? And we'll do this again with other trades. And again, we've been in and out of NVIDIA profitably for a lot this year. So anyway, I hope that helps. Hope it makes sense with your overall trading. Just be careful here. We're in a tricky place. We could go up or down. Just use your trade management and size accordingly so you don't have a lot of risk on trades. And with that, I'll wind it up. Let me know if I can help, and I will see you guys at the next update. Thanks.